few team members who are out of office today, so you might see some new faces speaking. We have an engineer, Doman, who's going to be talking a bit about our OETH staking upgrades, which has been a long time coming and just recently passed governance. So we're really excited to get that out. But that's coming up a little bit later on in the call. It should be a relatively quick call today. We're going to go through the normal updates, give some updates on OGN, some product and engineering developments, mainly that OETH staking upgrade. We're going to talk a little bit about our arms. We're exploring new arms for new assets, which has been pretty exciting. And then I'll kick it over to Peter to talk about some ecosystem updates and then introduce our special guest, Spinach Finance. So I'll get started with the OGN section. If you guys want to take a look at the metrics for yourself, you can do so at originprotocol.com/OGN. But some pretty impressive metrics. So I'm going to go through some of the ones I've been keeping my eyes on. First and foremost, the staking APY. We saw a slight increase, but it's been holding really strong over the past couple months. The staking APY on max locked OGN is currently 42.38%, so low 40% range, and that's with no new token emissions. All of that is funded through buybacks. So we're seeing more and more OGN get locked to earn rewards, and this is one of the metrics that is showcased on our OGN site. Again, that's originprotocol.com/OGN if you want to follow along. Just scrolling down here to the OGN staked. So the current amount staked is just under 560 million, which is right about 39% of the circulating supply. So pretty substantial increase since we started the new staking program, around 100 million new OGN staked. But let's take a look at the previous 30 days since our last community call. It looks like there was right around 550 million staked at the beginning of the month. So around 10 million new OGN has been locked, taken out of circulation to earn that 42.3% staking yield on max locked OGN. Couple other updates regarding OGN. One would be protocol revenue. So over the past 30 days, Origin Protocol has made right around $1 million of protocol revenue. That translates to about $200,000 of fees that goes to locked OGN. So that's holding pretty steady. Nice to see. Over the past 180 days, we've had about 5.5 million. So pretty strong month in October, right around $1 million of revenue. And we're going to keep our eye on that and continue giving updates there. Those are the major updates. The last one on OGN that I just wanted to shout out here is the amount of OGN buybacks. So we've been doing buybacks for a while, and if you guys are part of our community, you probably know that this really picked up around the beginning of July. And previously we had about 10 million OGN bought back. We're already above 40 million OGN bought back. And you can see that chart again at originprotocol.com/OGN. If you zoom out to 6 months or 1 year, you'll really see that the amount of buybacks has been increasing. And this is coming from those protocol fees that I mentioned, as well as our DAO treasury. So we have a sizable amount of ETH, Super OETH, and some stable coins in our treasury from the fees we earned before this buyback program. And that has held pretty steady. I believe we're right around probably $2.5 to $3 million. I haven't checked super recently, but that's right around where we are as far as our DAO asset balance sheet. And that 40.5 million OGN that's been bought back, that represents 6.2% of the circulating supply. So that's really been ticking up, especially with the volatility in the market recently. We've been buying back more and more OGN, taking that off the market. And if you annualize the buybacks, it's looking like about 38.6 million per year. And that translates to around 5% of the circulating supply, probably a little bit more. Didn't do that math myself, but I'm just saying, we have 40.6 million OGN bought back so far, and that's 6.2% of the circulating supply. So yeah, 38.6 million annualized, that's over 5% of the circulating supply. So pretty strong metrics there for OGN. Just wanted to give you guys an update there. I have a couple other updates before we go over to engineering. One being our new Morpho markets, and these utilize Borrow Booster to make borrowing super affordable. So we have one on Ethereum mainnet, and then we have one on Base. The one on Ethereum mainnet is our OETH USDC market. I'll send the link in the Discord for the few people there. I know most of you guys are tuning in on X, so if you want to check it out, just head over to Morpho and then search up OETH. It's going to be the one with the negative borrow rate. So currently the borrow rate is negative 0.6%, meaning you're actually getting paid to take out USDC loans. And this market's grown a lot over the past month or so. We're at over $3.4 million of USD supplied to the market, and that's in partnership with MEV Capital. I believe they are the primary supplier to the market right now. But yeah, 3.4 million is the total market size, and there still is some liquidity left. The liquidity gets eaten really fast on this market since we've had negative borrow rates. It's one of the most competitive borrow rates on USDC on Morpho. So typically, the liquidity doesn't last long. If you're looking to take out some USDC loans, I'd recommend checking it out sooner rather than later. There's $190,000 of liquidity left, and there's 3.4 million supplied. So really cool to see that we have a negative borrow rate still, and that's because OETH staking rewards are routed to the market to subsidize borrow rates. So you can claim those on Merkle, and as you take out USDC loans, then you're earning those incentives to offset your borrow rate. So the native rate's right around 2.6%, and then the OETH subsidies right around 3.3%. So that comes out to a negative 0.6% borrow rate. And then we also have the market on base that I mentioned. That's with Super OETH. So it's Super OETH B USDC. And that market is right around $1 million of total market size. We actually have more liquidity available on this market. So if you're a base user and you want to take out USDC loans, I would definitely recommend checking that out. The borrow rate has been negative quite a bit. Right now, it's just slightly positive, but still super competitive, under 1%. The highest I've seen it get was like 1 to 2%. Right now, it's at 0.4% on that net borrow rate. So the native rate on this one is a bit higher, 7.9%, but the subsidy coming from Super OETH is also higher. It's at negative 7.5%. So under 0.5% borrow rate right now on base, and then a negative borrow rate on the Ethereum mainnet market. And then lastly, I just wanted to call out a milestone that we had on our automated redemption manager, our staked ETH arm. We had a big volume milestone last week. We crossed 500,000 of staked ETH volume since we launched to external LPs. And we're already at 520,000, so that number continues to grow. But that translates to about $1.5 billion of volume, and that's only since opening to external LPs. I think it was primarily the Origin treasury before that, but we had right around $1 billion before we opened up to external LPs. So total volume on the ARM now is around 2.5 billion. So we're seeing significant numbers there, especially as TVL has grown. If you guys want to check out that growth, you can head over to our analytics page, which covers all of our products. It's analytics.originprotocol.com. Again, I'll send the link for you guys that are in Discord. I know most of you guys are on Twitter, so that's why I just like to call out the URLs. But I sent the link there. You can check it out. I'm going to head over to the staked ETH arm and check out some of these metrics. So really solid APY over the previous 30 days, 4.5%. So that's not quite double the liquid staking rate, but it's a substantial increase that's over 50% over the liquid staking rate at a relatively low risk strategy here where you're arbitraging staked ETH. And we've gotten quite a few partnerships and liquidity from some institutions lately. So I think maybe Peter's going to talk more about that. We did announce our partnership with Lido. They've provided liquidity to the ARM as well as a few other big partners. So we've seen some major growth there. We're right around $28.8 million of TVL, and that APY is holding pretty steady. So if you guys want to check that out, I sent the link to the analytics page, and of course you can head over to our DApp, which is app.originprotocol.com, if you want to become an LP on that vault. All right, I got through my announcements. I got through the OGN updates. So it's time to talk a bit about our OETH staking upgrade. This one's really exciting. We've been working on it for a while. We've had our audits completed, and now it's past governance. So we're getting really close to launch here. I'll let Domin speak about this more.
Thanks, Ryan. Let me just tell you a bit from the engineering technical side on what's been going on with the OETH staking upgrade. Maybe the best person to give this update would be Nick, but since he's been running this project, but he's based in Australia and it's like 4 a.m. For him right now, middle of the night. So for that reason, I'll be telling you about these updates. And yeah, this project was one of the hardest, most complex ones, and the most exciting ones. It's the biggest. There's quite a bunch of changes that we're introducing to our implementation of the staking upgrades. Maybe one of the bigger ones is we are using Merkle proofs instead of oracles to sort of confirm what is the state of the validators on the beacon chain. Ethereum beacon chain is constantly being upgraded with EIP proposals and Pextra and Dencon, which I think was launched in March. They brought some pretty significant improvements, which kind of sparked our whole exploration into how can the approach to staking be improved. And one of the things which Beacon Chain now enables and hasn't before, you can have on-chain exits, right? So previously, a validator needed to sign a message and send it to the Beacon Chain, and now there's a contract address where a certain configured address on chain can call, and that's going to trigger an exit on the beacon chain, an exit of a validator, which can be either partial or full. So that's also one change. Previously validators could only have 32 ETH, and you needed to either exit like full balance or not at all. And now it's possible to exit various amounts, which also comes with the third change that the Beacon Chain offered, which is that validators can now have a higher balance than 32 ETH, and they can have up to 2048 ETH on one validator, and any balance any balance above 32 ETH can be partially withdrawn, which is quite convenient because there used to be this sweep cycle that needed to happen on Beacon Chain, which would pull your funds and put them into the exit queue, but well, actually that sweep cycle happened after the exit queue, but there's no longer with the partial withdrawals that if you use partial withdrawals, that portion of the exit procedure is skipped, which should in theory make exits from Beacon Chain faster, but currently they're pretty long. There's I think 40-day waiting of exit queue due to some other event. And also, block hashes are now stored on chain, when we were investigating how we can is it possible to sort of do the complete accounting of ETH that can be in various states on the Beacon Chain, can it be completely done on the execution layer, so meaning on the on smart contracts? We started to investigate that, and it led us into quite a deep rabbit hole, and fortunately at the end we feel very confident, and this was also audited, that we covered all the various weird edge cases and race conditions that can happen, but we managed on the contract layer so completely to do the accounting on of all of the ETH on the Beacon Chain, and this is quite exciting because some other competing protocols, like Lido or Rocket Pool, they have this complex Oracle networks setups, which before this Denkan upgrade was the only way to accurately do it. But if you don't use this Merkle proof approach today, you're basically the next best thing is a complex Oracle setup where you must have trusted parties which are not connected to each other to run your software, to run nodes which will query beacon chain, and then they all come up with results, and then they need to what's the word? They need to come to a consensus. Which are the truest, which results are the truth in case any of the Oracle nodes would be compromised, and after consensus, then the results can be updated on the contract layer, which, as I said, was the best approach so far, but obviously isn't ideal since the trust is transferred between the contract layer and the off-chain part where the oracles run and sort of achieve consensus on what is truly the state of validators on the beacon chain. So we were pretty pretty excited that we managed to do everything on chain. And from the research we did, I think we're also the only ones that do this. But I'm pretty sure others will follow since this is the better approach, which increases security, makes things more convenient, and there are no downsides to it as far as we could tell right now. So yes, anything else I wanted to talk about this upgrade? Yeah, maybe one thing that the recent changes also use is the consolidating validators. So one of the things, as I mentioned before, is that the balance of the validator can go to 2048 ETH. But the other thing that is also very is quite cool is that the rewards that validator earns go immediately back to the validator's effective balance. So it's not like previously where they needed to be swept and reinvested. Now the yield the validators earn is immediately compounded and starts earning yield of the future rewards. Yeah, since this change was also quite complex and can manage a great deal of funds, we wanted to be really sure that it's also correct and doesn't have any huge problems or bugs. That's why we had three audits. We have three audits, so three different auditors auditing this code: OpenZeppelin, Sigma Prime, and Nethermind. Yeah, so we ran into 3 runs to really be sure about not missing anything or not having any holes where funds could be stolen. And as Ryan mentioned, it has already been deployed. It's I know it's either in the late stages of governance or the governance vote just passing. So anytime funds will go to this strategy and funds will be staked on the beacon chain using this new approach. And maybe a thought, why such approach would be good for institutional adoption. I do think this is the safest, the most convenient way to stake ETH today. It's also the easiest for any institution to do an audit. When they're doing their risk assessment, trying to figure out what is the risk of leaving funds with any of the protocols. They can just do it by reviewing our code on chain, because no responsibility is left to any process off chain, and there's just some maintenance and operation processes running, preparing the beacon chain proofs, but anyone can run that. We can give we have a Docker image that we can just give to whichever institution wants funds deployed in our protocol, and they can run those proofs if they want. So they can do complete assessment on chain, and they should be really. I would assume they would like that because there's no unknown unknowns, right? So they can just see how the thing is running and evaluate it. Um, yeah, and that's it about the staking upgrades. If anybody has any questions, I'm happy to take them.
Thanks, Doman. Yeah, really great to see this innovation coming from the Origin team. We're one of the only LSTs that have implemented Merkle proofs for beacon chain validation. But just to summarize, right, it seems like there's two really big improvements here. One is the validator architecture, like you mentioned, being able to hold 2048 ETH per validator. And that comes with efficiency improvements, right? Faster compounding, and you mentioned quicker exits as well. And then the other half of this is those Merkle proofs. So we're replacing the trust we would have to place in third-party oracles with direct verification of beacon chain balances. Would you say those are the two most prominent updates and user benefits, Doman, or am I missing any?
Thanks. That's it. Yeah. Thanks for summing it up so nicely. Yes.
Of course. I see Micah join the stage. I'm not sure if you wanted to add anything about the OETH upgrade or if you wanted to speak a little bit about our ARM expansion, but that's going to be the next topic.
Hey, no, I had a handful of questions while Doman was going, but he ended up answering all of them. It was really thorough. This is exciting. I think it could really improve the prospects for OETH, which is already an amazing LST.
Definitely. And it makes it very unique when institutions are looking at which LST to allocate to. OETH is one of the only LSTs that has these sorts of features. And of course, security is going to be of utmost importance for these institutions. So definitely a very important upgrade, and I'm excited to see the results of it here soon. All right, that concludes our OETH staking upgrade section. I'm going to hand it over to Peter. He's going to talk a little bit about our ARM expansion that we're currently exploring, and then he's going to give us some updates on ecosystem integrations. So I'll let him take the stage.
Thanks, Ryan. We are in the process of expanding the ARM to other redeemable assets, and we're starting with EtherFi. I guess those listening in who aren't already familiar, EETH is EtherFi's liquid restaking token. It's backed one-to-one by ETH and earns the restaking yields through EigenLayer. They've seen crazy growth over the last few years. They went from like 2 million in TVL maybe back in 2023 to now more than 9 billion in total TVL. So exponential growth. And the EtherFi ARM was deployed just a few days ago on Thursday last week, and it works very similar to the Lido ARM in that the ARM accepts ETH deposits and uses them to purchase EETH and potentially wrapped ETH as well when they go below peg, and then taking those and putting them through EtherFi's own redemption process to earn a yield on the arbitrage. And then, of course, if the ARM can't purchase the tokens below the peg, it will lend them to a money market. So it's always earning a yield. It's not yet available on the dApp to deposit ETH into, but you can now see it on the analytics page. And you can find the ARM contract in the docs alongside the other ARM contracts if you wanted to see that. We'll be adding it to the dApp at some point in the next few days, maybe this week, if not next week. And we'll be integrating it with other DEX aggregators as well, so that trades will route through the ARM. Not much else to share on that ARM, so I'll get into a bit some stuff on the Lido ARM. I can do a quick recap of maybe the protocols that have integrated into it, or some of the larger ones at least. First off is Yo protocol, which is the AI vault and vault manager launched by Exponential Finance a little while back. Previously, it was deploying 10% of the vault's liquidity into the ARM, but it looks like the AI actually increased that recently to 16.95, so just about 17% of the vault's ETH is going to the ARM, which comes out to right around 1,400, about maybe 1,434, I think, or at today's price is about 5.3 million. So a nice little chunk is coming from them. Then there's the Yo competitor, Summerfi, which is the other vault, AI vault and vault manager, and they've rebalanced up to the full allocated cap on that vault for the ARM, which right now is 1,010 ETH, or just under 4 million at today's prices. We actually submitted a proposal to them last week to get that increased because the ARM has been performing so well. MEV Capital, who's our curator for the Morpho markets that I mentioned, also deposited, I believe, 1,000 ETH to the ARM back in August, and that ETH is being routed back to MEV Capital's Morpho pool if it's not being used to buy the discounted ST ETH. And then Lido itself actually put just about 700 ETH into the ARM. I think maybe 692, if I remember correctly, back in early October, or actually I don't know what today's price is on that, but they want to put an additional 6 million in. So we might see that deposit come in at some point in the next few days. So between Lido and MEV Capital and the two AI vaults, the total ETH deposited is just over 4,000 at 4,136 ETH, or about 15 million at today's prices. There was also the Leva protocol that had support for the ARM. Leva has deployed several vaults that incorporate origin strategies too, and they just added support for the Lido ARM a few days ago. At the moment, their vault is just deploying ETH directly to the ARM, so it's not actually running as a separate vault. But at some point soon, when they have a little bit more dev capacity, I think they're going to maybe connect the ARM to some of the other strategies, or maybe turn it into a vault that can deploy ETH across multiple ARMs, maybe including the new EtherFi one. So stay tuned on that. I think that's pretty much all I've got. So probably back to you, Ryan.
Okay, thank you, Peter. I had a quick question on the EtherFi ARM. You mentioned the contracts were launched last week, but to my understanding, it's not a current opportunity that anybody can come and LP to the vault just yet. Where are we at in that process? Is there any internal liquidity on the EtherFi ARM yet, or how are we thinking about that?
There's like 10 ETH in there right now. So yes, there is some internal liquidity, but not a very large amount to be noticeable. So it's still very early on in the whole process of launching this ARM. But yeah, you can't yet deposit ETH into it externally. That will hopefully happen soon. We also won't find the LP token live on CoinGecko yet. That's going through the process right now. We want to make sure that there's an actual price on there that you can see for the token, which we have the API built for. They just have to enable it for us. So this will all be done and ready to go, hopefully at some point in the next few days. But for right now, you can see it on the analytics page, and you can see the contract if you wanted to go to the Etherscan page. But there's not much else that you can do with it as an external user.
Okay, so it seems safe to say that the EtherFi ARM is currently in the testing phase, and later on we may open it up to external depositors after further testing. Is that right?
That's accurate, yeah.
Okay. Thanks so much for those updates, Peter. It is time to bring on our special guests if you would like to introduce them, and then have Lana either give a demo or an overview of Spinach Finance.
I'm just going to hand it straight over to Lana. Lana, if you'd like to give an intro, it's probably better for you to introduce yourself than for me to.
Yeah, absolutely. Hi, everyone. I'm Lana. I'm with Spinach, or Spinach.5. If you wanted to check out our URL, I can drop it. So essentially, what we started out of Glow Dollar, which is a stable coin. We have a pair with OUSD, and we essentially donate all of our profits. And one of the things that we were finding as a team, being a stable coin, is that it was really hard to incentivize other projects to integrate and create usage for our token, and therefore it kind of became obvious that can be true for other people's tokens, whether that be wanting people to launch a liquidity pool paired with your token, whether it be wanting a say like a DEX to create a farm around your pair, or a lending protocol to add extra incentives and rewards around your token. We found it to be kind of hard. And so with Merkle, obviously there's a ton of end user incentive rewards, but there was nothing really geared towards other projects that would incentivize actual projects and teams, again, driving liquidity with your token and or creating usage with your token. And so that's why we created Spinach. And essentially what it is it's a daily retro competition.
Hey, Lana, I can't hear you right now. Peter, can you? Is it just on my end?
No, I lost her.
Okay, Lana, you might need to rejoin real quick. One second, guys. We're just dealing with a little technical difficulty. I dropped Lana down to the audience, and maybe now if she either leaves and rejoins or maybe comes back up on the stage, we'll be able to hear her again. Lana, if you're able to hear me, if you can request to join the stage, we can see if your microphone is working again.
Okay. Can you hear me now?
Yes, all good.
Did you hear any of the intro, or did it
Yes,
just
we
get...
lost you at daily competition.
Okay, sweet. So essentially Spinach runs a daily competition where every day, like at midnight UTC, I believe it is, we essentially distribute rewards based on whatever the competition wants to incentivize. Typically it's TVL and liquidity. And so again, it acts a lot like Merkle, except it doesn't reward end users. It actually rewards the projects and the builders who are driving both liquidity, integration, and usage for your token and or any token that you would like to incentivize. So we've done campaigns now for Glow Dollar. We've done campaigns for Good Dollar, which is like a UBI token. We've done campaigns for Regen, which is a token having to do with like carbon and fighting climate change. So we've run different competitions on different chains. We can deploy to any EVM chain. Currently, we're mostly on Celo, but we are deploying to Arbitrum, Stellar as well, and then can easily deploy to any of the EVM chains, which is kind of one of the things we're thinking about with Origin. Is it could be a good way. I know from what I did with Glow Dollar is you guys tend to like incentivize projects to create a pair, and then you kind of stream rewards to them. And so this using Spinach would just be a way to kind of automate the rewards, and essentially projects are going to be paid out their daily reward based on how much TVL they have in comparison to everyone else in the competition. I'm not sure if anyone has any questions because that's also a lot of info.
Yeah, thanks for that overview. I have a question. So this daily competition, say we come in and we have the most TVL, are we just the winners every day until someone comes through and beats us in TVL, or how does that work?
So it's essentially distributed evenly. It would be the same as like a Merkle campaign. So how Merkle would have X amount of rewards and it gets distributed to everyone participating in the campaign. It's just based on how much liquidity you have. And so in this case, it would be all projects competing receive some amount of funding. It just might be some projects might receive, $300, depending on how, high the competition is. On a daily basis, you might have a project receiving like say $50 and then a project maybe is receiving $2 kind of thing. So it does fluctuate, but it's not like a winner take all approach. That way it also incentivizes like smaller projects to put in as much liquidity pairing as they can with your token, even if it is smaller. It's not like they have to beat out a larger project.
Yeah, that makes sense. Thank you. And can you recap how those rewards are funded again? I know you mentioned it briefly towards the beginning.
Yeah, so essentially they're funded usually by the project who's wanting to create the incentivization. So with Glow Dollar provided the rewards. With Regen and with Good Dollar, it was the same thing. With you guys, the idea would be potentially, depending on which tokens you use, is you kind of already distribute when you have projects paired with you. You're already distributing the essentially whatever the yield is from the pairing on your side. You're already distributing that to them as a reward. So it would just essentially be most likely, I would assume, either funded through the yield already generated on the other side of the pair, or funded through your token. Or you can choose a completely different token. Like you don't have to use your own token. You can do it in a stable coin. You can do it in ETH. It can be any token you want.
Okay, got it. Thank you. I'll hold the floor here just briefly if anybody else has questions. Otherwise, we can wrap up.
Hey, Lana, do you want to pull up the Spinach UI and just show us what it looks like?
Yes. Okay, share the screen. Okay. Are you guys able to see the main page?
Yeah, I can see it just fine.
Okay, sweet. So here, I'll just go to the Glow Dollar competition right now on Cello. So you can see here, it's like right now there's $100 worth of rewards distributed every single day. And currently it's helped us drive over 200K in liquidity. So projects participating are receiving around 17%. And so you can kind of see here, again, it's November 3rd. So the project kind of resets on the 1st. So you can see like what a project's earnings have been this month based on how much liquidity that they have here. So you can see even smaller projects are being rewarded. But what's cool is most of these projects, even the highest competing ones, actually didn't have pairings with Glow Dollar or didn't have farms around Glow Dollar, like for UST Glow the ticker. So what we found is that projects are willing to create new pairs with the incentivized token because they get daily rewards, and dexes are willing to create farms as well around certain pairings. So we have found that there's been like a positive correlation between creating incentives for the actual projects, dexes, builders, whoever, and being able to see growth and liquidity. And so this is also on just Cello. If I go here too, you can kind of see our completed competition. So you can see we've been running it for a while. And so here's some of the projects we had, other projects here. So as an example, this is like a smaller token, but UBeSwap had no regen on their decks, and they also didn't have a farm around it, and they created a farm. Glow Dollar created a pairing that didn't exist previously. Regen created pair around it as well. So you can kind of see, same here. They created a pair around something that didn't exist. And so when you kind of go through the competition, you can see that, again, it's a good way to transparently incentivize other projects to create pairs with whatever token you want. So in Origin's case, it would be if you want to drive more liquidity in depth with, you guys have a lot of different tokens on different chains, but if you had certain ones you wanted to drive liquidity for, running a Spinach competition could just be like a kind of an easy, clear-cut way to help drive the liquidity, and also incentivize builders to want to integrate whatever your, like an Origin token, but of your choosing, into their decks, or again, launching a liquidity pair with it.
Is it permissionless to create a competition?
So no, it's not permissionless to create a competition, mostly just from the UX side. So essentially you would just message us. We would create the parameters with you, and then we would like set up the competition you would be able to send projects to us that we could get them added in, but then we would also kind of reach out to other projects to see if they wanted to participate. And I'll just drop the link too in the chat if people just wanted to check it out.
Oh yeah, I dropped it in a few minutes ago.
Okay, sweet. Thank you. And so none of the liquidity lives on Spinach as well, just to make that clear. So we're not asking anyone to deposit liquidity into Spinach. We just track liquidity based on pools that are provided to us and or contracts that are provided to us.
Nice. It looks like Arbitrum is the next chain that's coming soon. Is that accurate?
Yeah. So we've got a grant from them. I'm just essentially just in the back end getting ready to set up the competition, but we're on Arbitrum. To deploy to any chain, any EVM chain is not particularly hard as well. So it doesn't have to be on the 3 chains that we have.
Good to know.
All right, Lana, thank you so much for giving that demo. And for the majority of our audience who's tuning in on Twitter, that URL for Spinach is www.spinach.fi. If you want to check it out, appreciate you joining us today, Lana. We're going to wrap up here in just a minute. I wanted to give one more shout out. It is the beginning of the month, which means our token holder update is published. So we covered a lot of these updates in today's call, but not every single one. So if you guys want to dive deeper, I'm sending a link in the Discord chat. If you're tuning in on Twitter, just go to originprotocol.com/blog. It'll be the first blog on that page, but that'll go through our Lido partnership a little bit more. You can get a recap on Origin token, the ARM growth, the OETH staking upgrade, ecosystem updates, and then we also do product metrics for each month as well, so you can see the 30-day trailing APY on each of our tokens and the total value locked. So if you're interested in that, again, it's originprotocol.com/blog, and if you are tuning in on Discord, I sent the link in the chat. But if nothing else, we can wrap up just slightly early today. Thank you all for joining, and we'll see you at the beginning of the month in December. Thanks, guys.
Thank you.
Good call.